In this video, we are going to talk about dividend stocks for steady passive income. So before starting this video, please like this video and subscribe to this channel for our future updates. The term passifying income may not always go hand in hand with passive income. To put it another way, certain investments that have the potential to generate revenue are also the kinds of assets that will cause you to lose sleep over them. It should be noted, however, that this is not always the case. Here is a list of the best dividend stocks for passive income that won't keep you up at night worrying about money. Algonquin Power. This stock in a utility company offers investors complete value. In addition to the potential for passive income, Algonquin Power can offer a portfolio the defensiveness that is afforded by the consistent nature of the utility industry. The fact that this dividend aristocrat also offers one of the highest dividend yields makes it an ideal investment to purchase at times when the market is experiencing turbulence. At the current price of the company, the dividend yield on Algonquin Power is quite close to reaching 5%. However, it is the growing potential of the company that truly sets it apart as a unique opportunity for Canadian investors. Shares have increased by a market-beating 35% excluding dividends over the previous 5 years and have increased by close to 200% over the previous 10 years. Even growth investors would be advised to keep a close eye on this dividend stock that consistently outperforms the market. Bank of Nova Scotia. When it comes to building a portfolio that generates passive income, Canadian investors don't have to look very far outside the country's main banks. The Big Five all have some of the longest payout streaks on the TSX and pay out some of the highest yields currently. In addition to offering investors appealing dividends, the major bank stocks are currently selling at prices that are quite appealing to investors. The Bank of Nova Scotia has the highest dividend yield among the Big Five financial institutions, coming in at close to 5%. In addition to that, the financial institution has provided a dividend to its stockholders for close to 200 years in a row without interruption. If you are searching for a stock that is reliable, has a high dividend yield, and is inexpensive, then you might consider purchasing shares of Bank of Nova Scotia. The Home Depot Incorporated, NYSE HD. The Home Depot Incorporated is a retailer that specializes in home remodeling and is based in Georgia. The company sells appliances, building supplies, tools, and other things. In the home improvement business, the company that dominates the American market and is known for its competitive prices is also the largest one. Since the first quarter of 2022, the company has been distributing a quarterly dividend in the amount of $1.90, which corresponds to an annual dividend yield of 2.49% as of June 3. On May 20, Stephen Zacconet City lifted the price target on the Home Depot Incorporated from $327 to $348 and confirmed a buy rating on the stock. He had previously set the price target at $327. After reviewing the company's quarterly performance, the analyst decided to raise the earnings prediction for the fiscal year 2022. The total number of new homes available for purchase from the Home Depot Incorporated has risen above the 142,700 mark. It is a positive indicator because once these houses are bought, there is a strong possibility that the owners will need to pay for home improvement repairs, and it would be helpful for a firm like the Home Depot Incorporated to have more customers who need home improvement repairs. Federal Realty Investment Trust, NYSE FRT. Another real estate investment trust, REIT, on our list, Federal Realty Investment Trust invests in retail centers across the states in the Mid-Atlantic region, such as California and South Florida. Because they are required to distribute at least 90% of their taxable income to their shareholders and so make for attractive passive income stocks, real estate investment trusts, REITs, are something that we like to favor. Raymond James analyst R.J. Milligan gave the stock of Federal Realty Investment Trust, NYSE FRT, a double upgrade in the month of May, moving it from a market perform rating to a strong buy rating and setting a price objective of $140. The market analyst emphasized that the current sell-off in equity prices presents a chance for investors to purchase more shares of the company's stock due to the firm's attractive valuation both in absolute terms and in comparison to the valuations of the company's competitors. In addition, it is anticipated that the bottom line of Federal Realty Investment Trust, NYSE FRT, which trades under the symbol FRT, would expand by high single digits over the course of the next few years. As of the first quarter of 2022, the database maintained by Insider Monkey contained 912 hedge funds. Of these funds, 23 held a stake in Federal Realty Investment Trust, Medical Properties Trust Incorporated, NYSE, MPW. Medical Properties Trust Incorporated, which trades on the New York Stock Exchange under the ticker symbol MPW, is a real estate investment trust, REIT, that invests in healthcare facilities and then rents those facilities to operators. On May 26, the company announced that it will be paying a quarterly dividend of 29 cents to its shareholders. Over the course of the past few years, Medical Properties Trust Incorporated has dramatically expanded its business operations. The value of the company's total assets has more than doubled since 2018, reaching $22.2 billion as of the first quarter of 2022. The rise in the value of the company's gross assets has also caused a considerable increase in revenue, which is projected to rise from $704.7 million in 2017 to $1.55 billion in 2021. The dividend yield on shares of Medical Properties Trust Incorporated was calculated to be 6.69% as of June 3. At the conclusion of the first quarter of 2022, 16 different hedge funds were long Medical Properties Trust Incorporated, NYSE, MPW. During the first 3 months of the year, Cardinal Capital was the most active investor in the company among hedge funds. Brookfield Renewable Partners LP, NYSE, BEP. The limited partnership, LP, known as Brookfield Renewable Partners LP, NYSE, BEP, which has its headquarters in Toronto, Ontario, is an organization that owns and manages renewable energy assets all over the world. The hydroelectric, solar, wind and storage facilities located across Asia, Europe, North America, and South America are included in the portfolio of the company. Following the release of the results for the first quarter of 2022, the analyst Sean Stewart at TD Securities upgraded the stock of Brookfield Renewable Partners LP, NYSE, BEP, from a hold rating to a buy rating and set a price objective of $41 for the stock. The analyst emphasized that the company is well placed to face the challenges in the near term and that in the long run, Brookfield Renewable Partners LP, NYSE, BEP, will profit as a result of an increased focus on cleaner energy and reduction of carbon emissions. Because 70% of the company's revenue is pegged to the rate of inflation, it is reasonable to anticipate that the business will benefit when inflation is high. Exxon Mobil Corporation, NYSE, XOM. The Exxon Mobil Corporation, with its headquarters in Texas, is an integrated energy business that is also on the list of companies that are considered to be dividend aristocrats. Since the beginning of the 20th century, the energy behemoth has maintained a steady pattern of yearly dividend increases. Exxon Mobil Corporation, NYSE, XOM, had announced that it would distribute a dividend of 88 cents per share for the second quarter of 2022. The dividend was scheduled to be paid on June 10. The share price of Exxon Mobil Corporation, NYSE, XOM, has increased by more than 50% year to date as a direct result of the surge in the price of crude oil that occurred simultaneously with the beginning of the recovery process for the global economy that followed the lifting of lockdowns in various parts of the world. Exxon Mobil Corporation, NYSE, XOM, which is predicted to produce a good bottom line by the end of the year, may be expected to break even at a price of $41 per barrel for WTI crude. This figure is projected to drop to $27 per barrel by the year 2027 thanks to the efforts of the corporation. Exxon Mobil Corporation, NYSE, XOM, thanks to its participation in a diverse value chain across the energy sector, is able to keep its dividend yield at a respectable level. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.